What is going on, guys and girls? It's the Short Bear. Today we're going to talk about how to pyramid positions the Short Bear way. We've talked a lot about risk management, and you know that pyramiding positions is a big part of my trading, so I'm going to teach you how to do it yourself. To do so, we are going to go over a chart basically and the steps that I take to find the best risk reward. Now this should represent a basic chart. We're just going to talk about it with line charts just because it's easier to see. But basically, you've got a trend, all right? You're going to see the first wave, second, third wave, basically, and the attempt to break out again, all right? Now, I'm just going to draw lines just to show you, and this is what I do on normal charts. So I use a normal chart, so the candlesticks, but I also use line charts to see the bigger trends. Now, as you can see, we've got basically the low of day right here and the high of day, and in between that, we've got basically the support, which is the low of day, then the support of the first wave, the second wave, also resistance, and as you can see, as we trend down on the backside, we respect those lines and we move within the previous waves, basically. Now, as you can see, we've got the high of day and the high of day, so we've got a break, but it couldn't make it, all right? So this is what I'm looking for to start into a position. I'm looking for a sign of weakness. Now, it could be a high of day break, but it could also be basically, let's think about, we try to break out or we break out, we come back, we try to push, but really, we would see a lot of volume, so increasing volume, but on this push, we wouldn't see any kind of volume, and it looks like it can't make it, and then we get basically a big ask or something like that, that would indicate to me that the trend will break. And in this case, I would take a starter. Now, you maybe can't see it on this chart right here, but this is a head and shoulder pattern. So we've got the left shoulder right here, then the head right in here, and then the right shoulder. Now, why can't you see it? Just because it's the smaller time frames, all right? If you would pull up a bigger time frame, so let's say the first one was a 5-minute trend, this one would be basically a 15-minute chart. And in this case, you can see we've got a head and shoulder pattern. So once the head kind of breaks, I'm looking for the trend down, and at some point, a bigger bounce to kind of retest the previous support areas. All right, so the more you find that kind of interests you or that gives you an edge, the better. So look at every time frame. Now, why do I pyramid positions, and why should you? Well, I never have huge losses. All my losing days are basically losers adding up, but not one single trade will be a big loss, and that gives me an edge. And it gives me an edge because I have a complete emotional control over my trading. I never have big losers, so I don't really panic or anything, just because I cut my losers right away, and they always are small. The only thing that gets big is basically my reward. I get stopped out a bit more than if I wouldn't be pyramiding, but it's worth it just because I'm able to get those huge trades. Now, it's happened in the past. It's happened the last month where I could really get basically 20 to 25 times the amount that I risked on a single trade. It happens. Now, the good thing about pyramiding positions is on the stocks that are choppy, you're gonna get stopped out right away for small loss. But if a trend rides, you're gonna get more size and more size and more size, and will really capitalize on the move. Now, how does it even work? To do so, we're gonna take the chart that I just showed you before, and I'm gonna show you basically how it works. Now, this is the chart that I showed you, and we're just going to talk about it as if the low of day would be at $4 and the high of day would be right around $5, maybe $5.05, as it tries to break out but really can't make it. So in this example, we've got, as I said, 3 waves up. We tried to break, but on the break, we would see something like no follow through, no big volume, And at the same time, maybe something like a big ask, meaning a big seller, let's say 100,000 shares at 504 and 150,000 shares at 505, and it just can't make it. So right around here, when it breaks out and it can't really push, I'm gonna take a starter, all right? 1R. Now, 1R is just, 1R means one risk, and the risk can be like, let's say you get in with 1,000 shares at 5 or 4.99 or something like that, and you risk 5.1, so 5.1. So that would be one risk, all right? Meaning you are willing to lose, let's say 10 to 15 cents on 1,000 shares. That's what you're willing to risk, basically. Now it could be 10,000 shares or 100,000 shares, it doesn't matter. It can also be 100 shares. It's what you are feeling like is your maximum or comfortable risk. You are okay with stopping out without a single thought. Now you're gonna get, or I'm gonna get in, and right as it works and it cracks down support, the support becomes resistance. Now we are seeing the start of a downtrend, all right? So you have a high right here, which is a higher high, but right now you're gonna get basically a lower low. So you've got the low right here, makes a lower low, and as it bounces up, it makes basically the lower high, all right? And that is officially, as it breaks down right here, is officially a trend down, basically a downtrend. So my average at this point is going to be right in here, all right? And as you can see, my stop previously was at 501 with a starter here, all right? So 10 cent or something on one starter. And as it moves down and gives me basically a pullback to the previous support, which is now, as I said, resistance, I'm gonna add something. Now it depends on the stock and how likely it is to roll over. That's where the ADF scale and so on comes in, and dilution, but it depends. But I'm gonna get in right here and I'm gonna add 1/2 to one risk, all right? So I'm gonna add right here. And once I add, I'm gonna pull my stop from 501 to $5, all right? I'm gonna move the stop and add. So at this point, my risk comes down already and I've got more size, all right? The target is the low of day, all right? Keep that in mind. Or some kind of reversal like a lower high and then a move up or something like that. Or a higher low, I mean. Now, once the stock moves down once more, so breaks the low, we are in downtrend, officially in a downtrend, and we just formed a head and shoulder pattern, all right? So once it does that and bounces off the previous support, it comes back to the previous support right here, which is now resistance, and I'm gonna add once more. Now at this point, my average just before was basically right around, so you take the entry here, 1R, so your average is right around here, or was around here. Now that you add right here, so one risk, so that you have basically one risk here, one add, so an add right here, one risk, and an add right here, one risk, your stop is moving down again with the add to the previous resistance, which is right here. But now you're not risking basically anything. You're not risking anything. You are risking basically break even, which is also the previous resistance. So you're gonna add and you're gonna move the stop. So at that point, you've got 3 times the share size that you had at the start, and you are not risking one dime, right? And the target is still there. So worst case scenario, at that point, you're break even on the bigger size ever, or you're gonna get the target. So this is what it represents basically. Your stop is, so once it breaks down right here, all right, you are moving your stop once more. You've got new structure, which previously was support right here becomes resistance, so should react well once it gets back. It should act as resistance and move back down. So at that point, once it breaks, you're gonna move your stop. And now that's the power of pyramiding, all right? Now you've got the biggest size you ever had, and you are not even risking something. At that point, it's how much money can I actually make, and it's not even can I make money. So you're gonna go. So your average will be right here at 475. Now your stop is here. So basically, you've already locked in 25 cents per share, or you're gonna get basically the target at the low of day. All right. And that's the power of pyramiding. Now, what are the possible outcomes? Well, the first one is you get in at $5, your stop is at 5.1, and you get stopped out for minus 0.1 on your starter size. Once it moves down, you're adding 1R and you move the stop to $5, making it basically a 25-cent stop on 2R. This is the last time that you're risking something, because the next time you add, you're gonna move your stop to break even on 2R. You don't risk anything anymore. You're basically either hitting the low of the day, making it a huge winner, or you're stopping out and you don't lose anything. Now the next time you add though, your average is above your stop, because you're moving your stop in the green. Now it's not a question of are you making money, but just how much. And in this case, at the end, when you have the most size, you're either winning 25 cents on 3R, or you're winning 0.75 on 3R. And this is the power of pyramiding. You're either stopping out for a small loser, or you're going home with a home run. Now let's look at one example, and we'll talk about that one, exactly how I would trade it. For the example, we're going to talk about NCTY. It moved from $2.5 to $5 in the pre-market, and put in this low right here, right around the 380-ish region. Moved sideways and started doing some volume. So we've got the first wave, the pullback, and the second wave right here, and we're trying to push for a third wave. As we can see from those wicks right here, we kind of had some resistance at $5. We tried breaking even like 490-ish, but it got pushed back every time by selling pressure. Now, once we tried to break out, once we really broke out of $5, look at what the volume did, all right? So we ramp up right here on right around 90,000 shares. And normally on a continuation move, we're going to see some bigger volume. But look at the volume, 40,000, all right? Nothing. So starts pushing, so you don't have to enter right there. It pushes and you're waiting for the close of the first candle. Pushes down, can't make it, too much selling pressure, no buying volume, no follow through, no nothing, all right? So in this case, this is a very big sign of weakness. So push down, I enter right here. My stop is going to be at 5.1, exactly as in the example. Moves down, we've got some support right here, all right? And the previous resistance rise right here, all right? New resistance right there. So I'm going to be adding into the first push. I'm bringing the stop from 5.1 to the previous resistance, all right? The new resistance that is the nearest. So right here, $5, moves down, all right, pushes down really, has a pullback, all right, back to the previous support, which is now resistance. So I'm going to be adding there. And my stop is going to move from $5, so from 5.1 to 5 to 4.8, all right? Move sideways, this is the support right here. Move sideways, breaks down, pushes back up to the previous support, which is now again resistance. So I'm going to be adding once more here, moving my stop to the nearest resistance. All right. So right in here, once I add, my average is going to be right around 4.6. So at that point, I've got the biggest size. I don't have any more risk, and my target is at 380. Now it breaks down, but it doesn't break out cleanly, comes back into the range, so no add, doesn't come back. So that was basically the last add. I need a big push, alright, like that. Big push, alright. And once it comes back, that's where I can add. I can't add if it kind of breaks down, comes back into the range, can't add, alright? So for example, right here, once it breaks down, it doesn't break down like really badly, alright? I need a big push and a weak pullback. So this is the push I'm waiting for. Big pullback, alright? Back to the previous support right here. Big pullback, pushes, alright? Big pullback, pushes, adding. Same thing over and over again, okay? So here, for example, big push down, pulls back right here, add. And as you can see, moves down to my target. So at that point, I've got two possible scenarios. So either I'm locking in everything, all right? Or I'm locking in some and waiting for basically a reversal, which would be 2 waves up. So a pullback, pulls down, makes basically a higher low, which we've got right here, right? So low here, higher low, but then I would need a break over that 290 mark right here. So I would still be in, moves all the way down, all right? Even here, no stop out. And I would basically cover right in here at basically the low of the day, at the end of the day, because I didn't have any kind of push, pullback, and break out basically. We don't see that anywhere, all right? Maybe here. Low, high, makes kind of this move, and breaks out just a bit. So I would maybe have exited right here. And that was the example. If you have any questions, ask them in the comments or in the chat, and I'll see you in the next one.